people who are not working potentially.
Okay, well, it looks like it's 6 o'clock. That snuck up on us. Welcome, everyone. I'm Tracy Irby. I'm the director at the Center for Women Entrepreneurs. We have on with us tonight Donalisa Stinyard. She is our associate director. And we also have Barbara Ranke on, and she's going to be on Facebook. If there are any questions out there, she'll answer those. So for those of you who aren't familiar or new here, because we get new people every week, the Center for Women Entrepreneurs was funded by the state legislature back in 2015 just to help promote women entrepreneurs anywhere in the state of Texas. And they thought, what better place to put it than at Texas Women's University? Although you don't have to be affiliated with the university to take advantage of our services. And all of you grant winners know that. So glad everyone is here. We are part of the larger Jane Nelson Institute for Women's Leadership. They're dedicated to preparing more women to take on successful roles in business and public service to ensure women have the education to establish careers as successful C-suite executives, skills for building entrepreneurial businesses, and the framework needed to run for public office. In addition to our Center for Women Entrepreneurs, there's the Center for Student Leadership and the Center for Women in Politics and Public Policy. So we want to get this started this evening. Donalisa will be taking questions in the chat. So if you have any, feel free to put those in the chat. And I'll go ahead and introduce our speaker for tonight. We have Linda Bullwinkle with us tonight. She has over 50 years of working with people. Her experience ranges from dishwashing in a dorm cafeteria to running a 60 million international manufacturing business as the managing director and everything in between. After 20 years of corporate work, she took a severance package and spent the last 25 years working with small businesses, chambers, nonprofits, and in economic development. Today, she focuses her time on building Financial Fitness, a tax planning and preparation firm that also offers accounting services and consulting for small businesses starting up and moving forward. Linda earned her BS at Cornell, has an MBA from Southern Methodist, and is an enrolled agent licensed by the IRS. Linda, we are so glad to have you with us tonight.
There's nothing in there that says I have technical skills. So thank you very much. I appreciate that. I am pleased to be here. I really appreciate the opportunity, and I hope that you will enjoy this presentation. I'm going to talk about numbers. I know everyone loves numbers, and most people get into their own business because exactly what they want to do is bookkeeping. They want to do managing their business. They want to, spend their time behind that computer doing that. So what I'm going to offer, I believe, is some reasons why you should learn to love your numbers and the simple ways to go about keeping it under control and making it easy for yourself. So I'm going to turn my presentation on here. And we're going to get started. So we're going to do a learn to love your numbers. First and foremost, I know all entrepreneurs have heard this before, that only 70 to 70% of the entrepreneurs make it to year 10. So let's talk a little bit very quickly why, because it helps identify the numbers you need to know.
Linda?
Yes.
We do not see your presentation.
Oh dear. Okay. Thank you.
Yep.
Let me figure out what to do here. Why am I not sharing? Okay, let me go back. Okay, I'm so sorry.
No, no
Got the
worries.
sharing again here.
You should be able to just hit the share screen at the bottom.
Finding my share screen. There we go. Now I got to go back and find it. Sorry. Darn it.
While she's getting that ready, if anybody wants to, because we have all kinds of new people here tonight, just not just our grant winners, if you want to put your information in the chat so everybody knows who else is here and what your business is.
Here we go. Thank you. Okay, we'll try this again. So as I said, we're going to learn to love the numbers. Sorry about that.
That's okay.
So I own my own business, and there's a lot of steps that we go through to try to survive in those businesses. And there's a lot of things that change. And there's a number of reasons why people don't survive to 10 years or 15 years. So let's look a little bit very quickly, because it helps talk about numbers. So usually when you start your own business, you have an idea and you want to produce, buy, sell, offer, service that idea to other people. And a lot of times people will go out and say, all right, I'm going to do this. One of the number one things that they didn't think about is, what problem am I solving? Why do people need my business? How many people need my services? And that's one of the reasons that startups don't do as well as they think they will. And during the first 3 years, you really are finding some direction in establishing your business as a real company. The path isn't straight. And unfortunately, we as business owners have to learn to pivot, think again, and keep at it, and understand that there might be tweaks that go on. And this is usually after the second year is when people will get discouraged because their initial idea isn't moving forward as they thought it would. And don't go back to what is the need I'm trying to fill. Year 3 to 5 is my favorite. Every day is a challenge. Work never feels finished. Money is tight. It's very tight during this period of time, and you just want to scream. And the reasons you wanted to open your own business and be in your own business, you sort of forget. You're never going to get rich. You start to realize that there's no fast, quick way to make money. Your friends all have salaries and weekends off. You work 24/7, and your family's complaining. And that's usually in the 3 to 5 years. If you have a family, they're going to say, I thought you were going to make money, and this was going to be over. Because one of the things about owning your own business is it's a 24/7 position. You're not going to get time off most of the time. So 45 to 50% of the people who start their business don't survive year 5. And these are the reasons why. This is a very difficult time period. It is one where you want to move forward and then you move 5 steps back. There's no money in the bank. Now you got to figure that out. And you wonder why you're spending all of this time and what you're doing it for. This is when you have to be tough. They talk about mental toughness. You have to develop your processes and your procedures. And if I know, I feel like I have many a day that I'm just wondering, who is it that are continuing to put these obstacles in front of me? And why can't I just have a successful day as opposed to a challenging day? One of the biggest challenges is sharing that outside of your business. And you have to be the best representative of your brand. Because if you can get here, you're going to get over the hump. And this is the hardest time, is these first 5 years. So when you get to year 6 and 10, now's when you better have a really, really solid idea about your business and know that you didn't make it by yourself. You have to admit your mistakes, let go of your ego, participate in your community, help others, and try to let go of control so that you can start to develop a team. Only 30% of the people who started are going to make it to year 10. So in that class of startups, 70% of the market people have gone away. However, the sad part is you're beginning to see success. You're not so nervous about the money coming in, the money going out. It's not quite right. What am I going to do? Where am I going to find customers? You're starting to feel confident about your business model. You start to be mission driven and develop a team of employees who are excited, and you have to learn leadership. And then when you get after year 10, I'm going to go back here. It changes. It doesn't get easier, but it does change. And this is where you want to look at, can your business stand without you? Can it work without you? Can it run without you? Do you have a good team? Can you take a vacation finally? So those are kind of the stages that you go for. And at this point, you're running a very successful business, and most people are beginning to think about a succession plan. What's going to happen next? So if you're going to go through those stages, it's a good thing to understand what's important about those. So I'm going to start with numbers. Everybody starts their own business because they have some kind of passion for it. If you don't have passion for what you're about to do, you're not going to last a year, because it takes a lot more than passion and determination and patience and being positive, being able to learn from your mistakes and build on your failures. And this is my favorite one. You have to like and love your fellow man, lots of them, because you don't get to pick your customers like your best friends. And you're going to have to deal with all kinds of people. And that's a tough one sometimes. It's not always every person that you want to work with. So the best thing to know with here to begin with, before you do anything, is who is going to buy your product? Why are they going to buy your product? Where else could they buy your product? What is your needs, and what are the needs you're going to fill in your competition? If you can't answer that, I really suggest you go back to the drawing board. So let's start. The biggest thing, I think, is to start with knowing your market. And when people ask you, well, who are you going to sell for? Who needs your product? Everyone isn't an answer. Everybody isn't a market. You kind of have to narrow it down a little bit. So you want to have an identifiable group of customers. I'm sorry, hold on. I apologize, I forgot to do that. So everybody isn't your market. Even your best friend may or may not be a customer. So you have to identify that group of customers. What do they look like? Who are they? And how many can you reach with the marketing dollars and resources that you have? And you want to be able to keep tabs on your market and know the changing needs. So I use the example of zebras. Zebras come in a group. They're known as they're always some group of them together. So I can look at them as my identifiable market. Looks like there's 1, 2, 3, 4. So I have a market of 4 to sell my product to. I can probably reach them and I can watch them. And you want to think of it the same way. You want to be able to reach your customers. You want to be able to know who they are, and you want to keep tabs on them. So now you want to know how many. So I'm just going to move this right out of the way here for a minute. Okay. So the number one reason businesses fail is because people don't know their numbers. They don't have that experience or skills to manage the business side of their business. They might sell their products well. They may make and produce their products excellently. But most people do not open their own business with the idea that they cannot wait to do that bookkeeping and accounting and analyze and do an analysis of their numbers. So don't feel bad if you feel this way sometimes. You got to love your numbers, and we're going to figure this out. So before we go any further, is there any questions that people have about just getting through those first couple years and what's going to be important and why numbers are important?
I don't have any in the chat. So
Okay.
if anybody has anything, we'll going once, going twice. Okay, keep going, Linda.
Okay. So the number one thing is I have been doing this for a long time, and people will come in with boxes of receipts and bank statements, and they'll put it on my desk and they'll go, I've got to get a handle on my business. And I kind of look at them and said, yeah, I think that's a true statement. So let's talk about how to do that simply. It's not the box of receipts. It is the bank statements, but let's narrow it down a little bit more. You should be able to know your numbers every single day. So let's go find them. They're fairly there, and they're very, very simple. So here's my basic rules. Keep it simple. Write it down. Work at the lowest denominator. And by that, I mean, go to the lowest measurement you can find. For example, I know how much I need to invoice on a weekly and monthly basis. If I manage that, the year's fine. I don't worry about the year. I worry about the week and the month. And the reason I worry about the week is because I still have another week before the end of the month to address it. So you want to work at that lowest denominator of a measurement to know what your numbers are. You want to know that every single day. You don't want to wait till the end of the year when you're going to count up your money. And if you will do those 4 things, I guarantee you will learn to love your numbers. The numbers are right in front of you. For most people, they don't realize that it's that simple. So let's keep it simple and pretend we're going to have a business. So we're going to have the Bullwinkle Wool Sock Company. I love wool socks. I like people. And I think everybody should have a pair of wool socks. So I'm going to sell them to them. So what do I do first? Okay, first I need to figure out if there's a need, and then I figure out what the size of the market is. Well, interestingly enough, I found out that there is a global socks market that is anticipated to reach $61.5 billion by 2026. And it's because of the rising demand from the sports industry. Woohoo! I am going to be rich. I have hit on the market I should always hit on. I love socks. I love people. And I can sell at least $1 billion of the $61 billion. Sounds reasonable, don't you think? Maybe we better keep it simple. So the first thing, what's the need? People want warm feet. What's the size of the need? 61.5 billion people by 2026. not very realistic, is it? So let's think about this differently. Who can I sell my socks to who will have a need and I could reach with the limited budget that I have? So I decided I'm going to go with women over 70 who have cold feet. Where am I going to find them? Well, they could be in nursing homes. They could be in assisted living centers. They could be in senior centers. They probably have children that would love to find a relatively cost-effective product to buy them for their birthdays and for Christmas. So I think I've got the jackpot. And how am I going to manage this? So I'm going to be realistic. I'm going to say, how many are there? Well, there's hundreds of women to reach. How am I going to narrow it down? So I look the opposite way. I only have $500 per month to invest in this budget, in this product. So that's going to limit me to keeping track of exactly what I can do. So I'm going to go and figure out what it's going to cost me. So I'm going to put this on paper. I'm going to make a guess. And if my guess is pretty reasonable, I can use this to grow my business. So I think I could probably sell 100 pairs of wool socks for $10 a pair every month. So that's going to be my goal. I am going to sell 100 pairs of wool socks for $10 per month. And I found a place I could purchase them for $4.50 a pair. So I only have $500 at $100 or 100 pairs of socks at $4.50. I can keep it under my $500 investment. So, all right, so far so good. So if I sell 10 pairs a month, that's $1,000 in sales. If I purchase 10 pairs a month, that's 450. Sorry, it should be 1,000 pairs a month. And it should be, I think I got 100 pairs a month. Boy, I really screwed this one up. I don't know my numbers. So let's say that I'm going to sell 100 pairs a month at $10. That's 1,000. And then I'm going to purchase 100 pairs a month, $450. My gross income is going to be $550. So I'm going to make $550. My expenses are going to be sales tax, and my merchant fees are going to be $15 a month. So my income is $454.75 per month. Okay, am I happy with that? Do I need more? Do I want more? Is this what you had in mind when you started your business? It's pretty simple. It's just a determination of how many you can sell. What are you going to sell it for? What will it cost you? And what are you going to have at the end of the month? Now, I personally could not live on $454.75 a month. Although there are some months in the last 10 years when I wish I had $454.75. So let's see how I'm going to keep track of my numbers. And I love my numbers because if you see, if I do that every month, I'm going to start to grow my business. And all I have to keep track of is the 100 pairs of socks a month, making sure I have 100 pairs in inventory, some sort of labor. Maybe my son will help me out and I'll give him some Sonic cards or some money. I'm probably going to have to do some kind of advertising. I have to pay rent. I need a cell phone and my internet, and I have to pay sales tax. So this is my simple spreadsheet that I love. I use Excel. I keep track every month of total sales, what my purchases are, and what my costs are. It's not fancy. Don't have to have any kind of software except for a piece of paper, or if you like Excel, it'll work. The most important thing is that they have to be in writing. It can't just be in your head. It has to be on a piece of paper. And I find it helps if you look at it every day. So now we can see I am a successful sock person. Everybody loves my socks. I'm going to have thousands of hundreds of dollars towards that billion. So I think maybe I'm just going to branch out and try something else. This is where you make mistakes. You get overconfident. You start to think, oh, I'm going to add more products to my product line and I'm going to expand into new markets. This is where it's hard. All of a sudden, on top of your existing business, you're actually starting another business. And we don't think of it that way. We think of it as, oh, well, I sell socks. So I'm going to sell socks with eyes and hair now. Well, are those women who have cold feet in the nursing homes going to necessarily want socks with eyes and hair on them? Maybe, maybe not. So I may have to go find a new market, the market of kindergartners, let's say. Completely different, takes me off focus. So you want to be really careful because this is an area where we kind of overextend ourselves. We think, okay, and really what it comes down to is you're the one who's a little bored. You're the one that sees new ideas. If you are made it to year 5 and year 6, you're already thinking about the next idea. And it's the hardest thing to stay focused. But you've got to stay focused and make sure one business is firmly on the ground and you know your numbers before you go to the next one. So another area that people get themselves in trouble is cash flow. Cash flow is not profit. Cash flow is not determination of how much money you're making. It's when is the cash coming in and when is it going out? How are we managing our income and how are we paying our bills to stay afloat? And this is a tough one. Anybody who has, if you've ever had a job as a waitress, I worked in college as a waitress. You learn very quickly that the days when you make a lot of money and a lot of tips, you put that money away for the next day when you don't make a lot of tips, because there's nothing to say that every day is going to be the same. And it's the same idea. It's stretching the income that you get to cover your expenses. And this is kind of what it looks like. So if we look at week 1, we may start week 1 of the month with nothing in the bank. And then through the course of the month, we bring in $1,000, or maybe that week we bring in $1,000 from the month before. So now we've got $1,000 and we pay our expenses. At the end of the week, we have $650 in the bank. So we start week 2 with $650 in the bank, but we're going to have to buy more socks. We sold a couple more pairs of socks last week and this week, and the money's coming in. But now we got to buy more and we have to pay our bills. Our bills are higher than what we have in the bank. So we've got to float $150 somehow. This is usually when we start using our credit cards. And I use my credit card, so I have nothing good or bad to say, except for I wish I didn't sometimes. So now we're going to start week 3. We're going into week 3 in a hole. But thank goodness we had good sales last week. So now we're going to bring in some income. We have a little bit of expenses to pay. And at the end of the week, we're back to a little bit of break even. Now we're going to week 4. Week 4 is a boom. Boy, we have had a great month. And all of that money is coming in. But oops, we have to plan. We have to pay rent. We have to pay utilities. We have to pay our telephone bill. So at the end of the week, which was quite successful, we're back in a hole. Week 5, we start out in a hole. We brought some income in, paid our expenses, and at the end of the month, we have $400 in the bank. And that's your cash flow. And the challenge to a small business is keeping that as evenly paced as possible so that you don't end up the week in a hole and you're able to cover your expenses. And this is why you kind of have to know your numbers, because you need to know when they fall and when they are going to hit you and when they're due. Also, the other surprise that none of us like is self-employment taxes. That $400 I had left over last month, I have to save 16 to 20% of it for my quarterly taxes. So I recommend 16 to 20% of your quarterly gross income you set aside however you need to do it. If you need to put it in another bank account, if you just have to do it mentally, I would put it in writing and write it down. You have to save that for quarterly self-employment taxes. These are due on a quarterly basis. Unfortunately, the IRS does not count their quarters quite the same as everyone else. The first is due April 15th, makes sense. End of the first quarter, ends in March. The second one is due June 15th, doesn't make any sense. It's not the end of the quarter. The end of the quarter is June 30th. The next one is September 15th. Now this is now, again, in the middle of the third quarter. And then finally, we all have till January 15th to make up for whatever we didn't get paid in the prior quarters. And rule of thumb is better to pay something than nothing. A lot of us, when we started out, could not make those 16 to 20% quarterly taxes. It's okay. You got to do something. It's good discipline, and it's the best way to manage your tax liability. It is a surprise for new business owners when it comes time to do their income taxes. They think they didn't make any money, but you're going to be taxed for self-employment income. And believe me, I've heard this before, believe it or not. Just because there is no money left in the bank does not mean you don't have to pay taxes. Just because you took all that money out does not mean that you're not going to pay taxes on your business. And you have to keep this discipline in mind, because I unfortunately am on the receiving end of people's surprises sometimes. So before I go any further, are there any questions just in some of those, that information that we have just reviewed?
Yes. So Michelle asked, I think you answered this one. Do you have a dashboard, or can you recommend one that is transparent on the daily basis? And I think you shared that you use Excel.
I use Excel. And I recommend that people use Excel. You can spend a lot of money on industry-specific dashboards. You can spend a lot of money on QuickBooks Online. You can put your money there. My recommendation is, unless you're going to become an accountant or a bookkeeper or specialize in that software, keep it simple. Use Excel. If you know it. If you don't, it's a good thing. It's a good tool, and it's very simple. And I have a sheet that I send out to people all the time to just put in Excel and use it. And you can adjust it for your business, but it's very simple. Months across the top, expenses down the side, and just keep track of them. And the reason I recommend that is you didn't go into business to become a software expert, unless that's your business, in the industry accounting software or the tracking software. And you don't want to spend your time there. One of the hardest things I think we all have, and I am just as guilty, is sometimes it's easier for me to go work on something else than focus and do what it takes to make money. It's very easy sometimes for me to sort of like go, oh, I'm going to go work on this because I really want to get it organized. That hour cost me a loss of $200 as an example. So you don't want to get really good at something that's not going to make you money. You want to get really good at all of those items and spend your time on what's going to make you money. So I just recommend that you keep it simple, and you'll save money as well. Any other questions?
Yes. We had somebody ask, what percentage do you recommend when it comes to paying yourself?
So I don't have an immediate answer. So let me try this. When you go into your own business and you could be an LLC, or you haven't even gotten there, you've done a DBA at the courthouse or county, something like that. You and your business are one in the same. So if your business has a profit, that's your money. If your business has a loss, that's your loss. So technically, self-employed people don't pay themselves per se. They have the option to take money out of that business bank, and then they have the necessity of putting it back in if necessary. So you're free to pay yourself whatever you want to, but know that, let's say I had my $400 in the bank and I set aside my self-employment taxes, and I decided that I'm going to take 250 out. That's what I'm going to pay myself this month. And then we have a horrible winter storm that closes Texas down for 3 weeks. And I can't sell any socks, but I still have to pay rent. And I still have to pay utilities, even though they didn't work. And I have to pay all those things. I'm going to have to put that 250 back into my bank account when it's needed as well. So does that make sense? You and your business tend to be one and the same in the early days.
Yeah.
So I tell people, you can take out as much money as you want for yourself. Just be prepared to put it back in.
Right. And then the last question, do I have to pay self-employment taxes for a sole member LLC?
Yes, you do. Until you become a corporation, you have to pay self-employment taxes. And I'll help with that a little bit. You don't have to pay self-employment taxes, but when tax time comes around and your income tax return identifies self-employment taxes, you're going to have a little bit of a shock, because self-employment taxes are basically the same as payroll taxes, with the exception that you are the employee and the employer. So 50% of your employment taxes, self-employment taxes, are to cover your Social Security and Medicare as the employee, and the other 50% is to cover it as the employer. That's why it is so high, and you're going to pay it. So that's my recommendation, that you pay it a little bit quarterly, so it's not a shock. And even if your business has a loss, depending on the amount of gross income that you made, less some of the deductions, you'll be taxed on that for your self-employment tax. So until you become a corporation, you are paying self-employment tax.
Okay. I think we're good, so we can keep going.
Okay. All right. So here's some things to consider. These are a few other numbers that I think are important. Don't go crazy. Okay. This is really important. You think, I know that none of us think we're going crazy. Okay. None of us do. But starting a business is not a license to spend and anticipate that everything you pay for is going to be deducted. It is a sad day when people have spent money on things. And I'll give you some funny examples. So I hope you haven't done this, and I'm certainly not trying to do anything, but there are some funny examples. A young woman decided she was going to go into her own consulting business. And so she completely remodeled a bedroom into an office and bought brand new furniture. And she didn't make a lot of money that year, but her husband had a very high salary, and they decided they were going to cut down on the amount of his withholdings because she was losing money, and look at what all she spent that year. Well, number one, if if you have to make money in order to take deductions. You don't just take deductions without making money. And we can identify those deductions, but they're just going to be held as a loss carry forward until you make money. So the business's deductions are not going to help with the husband's W-2 income. So number one, they made a mistake by not identifying what he should be doing to cover his tax liability with his W-2 income. Secondly, because furniture, fixtures, renovations, and all that is only a small percentage of your home office per your home, you can't deduct everything unless you had a huge income. So we took it as an asset, and they were very disappointed that the hundreds of dollars that they spent didn't come back to them as a refund. It doesn't work that way. It's not black and white, and 1 and 1 is not 3 when the IRS is concerned. So recognize that you're a business, penny pinch, think through your expenses, and just don't go wild. Number 2, regardless of what you do, track your mileage. It's a great way, it's a legitimate deduction, and it's easy. So don't go buy a brand new car when you start your business, because it's probably not going to be a complete deduction. You can buy a brand new car and you can deduct the interest on a loan, but you cannot deduct the brand new car unless you have the income in the business that can offset it. So that's a real myth. People go, well, if I buy a new car, what can I do? Well, keep track of your mileage. Get an app. It's the easiest thing. You can track your mileage for business. I use MileIQ. I like it because as long as my phone is with me, everywhere I go, it tracks my mileage. And at the end of the day, I can say, oh, that was business, that was personal. And eventually it starts to track. So I go to a client every other Wednesday and MileIQ knows that's exactly business. Regardless of what you choose to do, you must keep a written documentation for mileage. This is one of the #1 flags for self-employed people from the IRS. They will audit for mileage. And once they audit for mileage, it opens them up for every other expense that you've deducted to be reviewed. So get good at it. I use my MileIQ because I can just print out a report. It shows what I've done. There's no questions. In 2017, when the Tax Cuts and Jobs Act was introduced, it eliminated entertainment and all meals with entertainment, unless you have a business meeting before or after, or discuss business during the meal. But you can't take people to a Dallas Cowboys game and expect to write it off. You cannot write off the tickets. You can no longer take people bird hunting in Canada and write it off. So it's really down to meals, and the meals are 50% of what the cost is. And you have to be able to prove that they're a business meal. And I always tell my clients, write down who you had that meal with on the receipt at the dinner or lunch or breakfast before you leave. And every meal, just because you I talk to my husband talks to me all the time about my business. And I cannot take every meal that we have a conversation about my business as a business meeting. So, don't get excited that, oh, I can go out to dinner every night and I'm going to be able to deduct it. It doesn't work quite that way. Last but not least, act like a business. There's a couple distinguishing characteristics that are used to establish whether you're a business or a hobby. And you have to make sure you cover that. And you're going to laugh, but the first one is business cards. I know people tell me, oh no, I have my business card on my phone and I just do this and I just do that. Business cards. It's an old-fashioned, easy way to leave a calling card of some sort or a calling card, but have something in your hand that can show that you are out in the world promoting yourself as a business. I call it business cards. You can call them brochures. You can call it whatever you want. But the federal IRS is not going to buy that your cards are online. They are not going to go with, I am a business because everything I do is online. You've got to have some documentation that shows that you're a business. And a hobby is not a business, and continual losses, they're not going to be deducted against anything until you get a business profit. So at some point, and the reason people will ask me, well, isn't it like after 2 years you have to show a profit? What it really is 5 years of continual losses, and you're going to get audited. Somebody's going to pull the strings and say, I don't believe you. And that's what you want to be careful of. So those are the tax side of me. So does anybody have any questions about those? Because there's a lot of rumors and myths out there about what you can and cannot do. And believe me, I've heard them all. So do you have some questions in this area?
No, we can keep going.
Good. Okay. Well, how are you going to love your numbers? This is why I love my numbers. If you know your monthly sales goal, and if you break it down to your weekly sales goal, you know where you are. So if I'm going to sell 100 pairs of socks in 1 month, and I'm at the second week, and I've only sold 25, I know that I better get my butt in gear in the next couple of weeks to get the rest of that 100. Okay. So it's real simple. It's not, oh my God, I have to sell 12,000 socks this year, right? Or 1,200 socks this year, or 25,000 socks this year. It's today I have to sell a pair of socks. And it's a lot easier to manage. You don't feel overwhelmed. And I know that if I sell 1 pair of socks to 1 customer, I'm going to make money, right? If I sell 2 pairs of socks to 1 customer, I've done even better. So you need to know what your must-make sales number is on a daily, weekly, monthly basis to cover all your costs. And I have to tell you that I think if you don't write it down, you're not going to remember it. You're not going to take it as seriously. There's something about writing it down, one, and writing it down when you make it, and writing it down when you don't make it, that makes it much more easier to manage. So in summary, don't fail. Don't be the people who don't make it 2 years or 5 years, make it 10 years. If you know your numbers and you know the competition, you know what the need is. We're going to sell socks to women with cold feet. Now, how much better can it get than that? We've identified them. We know where they are. We're going to go sell to them. I need to know what my first year sales numbers and costs are going to be. And I need to break it down to a monthly, weekly, even daily. And I know we love our customers, but they're really numbers. Know how many you have. Know how many you have to sell to. Know how you're going to grow that number. I like budgeting. I don't like it when somebody puts a budget on me, but I like budgeting for me and I like budgeting for my business. So I always have an idea of where I need to be in my income and where my expenses need to be. If you don't have that idea, you don't notice the creep. And I'm sure nobody else has ever done this but me, but sometimes I see something on Facebook or Instagram or in my emails, and I think, oh, that looks good. I think I might check that out. And the next thing I know, I'm getting charged $10 a month. Well, if I don't watch that, I've now spent $120 in the year, and it's creeping up. And that's, I shouldn't be doing that. So you won't know that's happening if you're not paying attention to your income and your expenses. And the number one success is to manage your customer base and maintain your cash flow so you're growing and moving at a measured pace, and you don't overextend yourself. You always know your numbers, and you can go at the pace that feels good and is successful. And then you will be successful if you love your numbers and you keep track of some very simple things. See, look, I am now a very, very successful sock seller. I know budgeting. It's awful. We hate it. We love it. We don't like it. Think of it this way. You have a goal. You know what your costs are, like rent, utilities, and phone. You know what you have to sell. You know how much it costs for your socks. You know that your phone, your meals, your meetings, what they're going to be. If you go with a very simple Excel sheet, and you know what your numbers are, and you know what your costs are, you're going to keep it in control. There's nothing like seeing it right in front of you. And if you have questions or would like more information, you're more than welcome to contact me. Try to allow 24 hours for an answer during tax season, because sometimes there's a little more than I can handle in one day, but I always respond. And now I answer questions.
Okay, so we did have some in the chat. Let me get back here. So Belinda asked, do we have the option of keeping gas receipts instead of mileage?
Of course you do. So let's talk about that. It's one or the other. So you can keep your gas receipts. So sometimes people will say, okay, I'm going to keep my gas receipts and I'm going to keep all my expenses, repairs, new tires, and all of that. Okay, you can. But we still have to keep your mileage so that we know what percentage of those total costs we can apply to your business. So if you're going to do that, you may as well keep mileage anyways. And I will tell you 9 times out of 10, mileage will give you a better deduction than gas. Even though I know gas is very high and it feels like it's more expensive. And it also feels as though repairs and tires and all of that is more expensive. But normally the mileage is going to give you a better deduction than keeping track of all of those receipts. But I do encourage people to do both their first year, and then you can make a decision. Once you make a decision on a vehicle, you can't change it every year. You have to stick with it. So
okay, great.
Those are things.
Great. Malin wanted to know, would you recommend us to learn more about the tax codes on the IRS website?
Sure. That's always, it's always good to know. The IRS has a good website. They have a small business format and information. I think it's pretty, I know it, so it's hard for me to say if it's hard or not hard. I think it's a little confusing sometimes, but if you keep up with your income and your expenses, you're basically addressing the tax code, because that's what the IRS expects. And you pay your quarterly taxes. And the reason for that is the United States is built on paying taxes when you earn. And it wasn't a big deal because we all had W-2 jobs. So it was no big deal. And now with the economy, and so many people are independent contractors or self-employed, the IRS has had to crack down on making people understand about self-employment tax, because they didn't know. It was just one of those things. So those are the areas that they really emphasize. And then they also can give you, you want to learn more about vehicle deductions, there's hundreds of pages that you can read on that. So there's definitely good information.
Okay, so Michelle asked, do you factor in a break-even point clarified for a startup when all of the money spent to date is my own money, like a payback of the money invested?
Yes, yes. So you want to keep track of all of the money you've invested. And you want to, I think we all do that to expect to get the money back, right? We think, okay, I'm going to earn this money back and then some. So I'm making an investment. So you want to keep track of it. When I do somebody's taxes or their books, we identify that as startup money and we know how much it is. You can deduct a certain amount of startup money in the first year and then amortize it over the years. And that's one way of getting it back. The other way is to loan the business money. We identify it that way, and it incurs interest. And when you take the money out, you're taking a payment of the loan, and then the interest is what you would have to identify as income. So it protects you some from taking income out and having be taxed on it.
Belinda wanted to know, what was the current mileage rate?
So this year is a great year. It's split in half. So as of July 1st, it's 62 cents a mile. Prior to July 1st, for January through the end of June, it was 58 something cents.
Okay. And then we have a couple of tax questions. Are you okay with those, Linda?
Absolutely, sure.
Okay. Pamela said she started her business in July of 21 and she used TurboTax Small Business Edition to file. She has a single member LLC. Can I rely on TurboTax to make sure I'm filing correctly, or are there other things I need to do?
So here's if you know what you need to file for your business taxes, because your business is going to be on a Schedule C, then usually you can get through TurboTax. It doesn't ask as many questions as it could or should to help someone know what kinds of options that they have for their business and for their taxes, but it does a pretty good job at being very, very simple. So if you know your taxes, if you will, then you can use almost any tax software. The difference, I think, is TurboTax is based on really people who don't have a business. So it's going to ask the questions and you have to know enough to push it into your business and what you need. Its capabilities are there. It just doesn't ask you questions. You're going to have to ask it questions and push.
Okay.
Okay.
We had another question. So do you have any advice for somebody that is expecting a refund from the IRS and they haven't received it yet?
Well, advice, no. A couple things you can do. There is, so first things first, make sure that you've gone to irs.gov and there's on their homepage, there's a little link for where's my refund. And you go to where's my refund and you have to put in the exact amount of refund that you're expecting, the tax year that you did it, the tax year you're looking for, and the primary taxpayer on the tax return. So for example, you might not be, if you're married, it might be your spouse's tax number might be the primary tax person. So you need to know those and the exact dollars of the refund you're looking for. And if you plug those in, then it will tell you a number of things. First one's first is we don't have your taxes, which scares everybody, right? So this first thing to know is, are they processing it? Are they sitting on it? What's going on? The second one is, if it's saying we've received it and it's not been processed, that is the longest time frame. So the IRS will accept a tax return, and it may not post that tax return for 2 or 3 months. So that's the dilemma that we have because of their processes, their computer systems, and frankly, they've been very, very, very shorthanded. If you're looking at a prior year, so I have a couple of clients who are still waiting for 2020. They're called taxpayer advocates, and there's taxpayer advocates in Texas, every state. You can Google taxpayer advocate with the IRS and find a phone number near you. They will talk to you over the phone, and if it's been a year, they will start to help you find out what's going on. It always seems to be about that time when, lo and behold, they found your tax return, and now you're going to get your refund and things are going to be good. There's a couple reasons it happens. One, computers. Okay, things get lost. We think they've been filed, and it didn't go anywhere. The second one is if it was mailed. If it was mailed, please don't expect any kind of answer for years. So my suggestion would be to get a hold of a taxpayer advocate and find out if you should resend it or refile it. Because I think that's our biggest problem right now with the IRS. Things that were mailed are lost.
Okay. Perfect. Do you have any system for keeping receipts from online purchases?
I just download either the email or the receipt that I received, and I keep track of my receipts by month, but you have to have them.
Okay. Is there a specific format or example reference of how to write the business loan when you're using personal startup money? I think referring back to when you were talking about that.
Sure. So yes and no. Okay. The important thing, interestingly enough, to have it, if you were audited and you wanted to be able to prove it, is it needs to be something to the effect of Joan Smith is loaning the Bullwinkle sock company $4,000 to start their business on this date. The sock company will pay back this money either within a period of time or within a period of time no later than, okay, and will pay X amount of interest for borrowing the money. If there is no interest and you get audited, the IRS is not going to buy it. So it could be 2% interest. It could be 1% interest. You could have a 4% annual interest. I mean, there's no definite. It just has to be there.
Okay. So I have QuickBooks Online. Do I need an invoice or receipt for every transaction, like my QuickBook fees, subscriptions, etc.? I categorize everything, but should I do more?
So right now, that's a very good question, because so much of what we have is into a QuickBooks or in a statement of some sort. Right now, the rule of thumb is to have receipts, and they can be digital receipts. But QuickBooks, usually you can go to your subscription in QuickBooks and pull up every month for your charges. And I would just download them and put them into a digital file.
Okay. Is it manageable to track all the details without a software like QuickBooks or Sage for a product-based international e-commerce startup business?
Probably not. Probably not. You're probably going to want a little bit more, you're going to want some help, and the software will help you to a certain extent to be able to keep track of things. I just keep it as simple as possible. Some of what the software I think would do for you that I like is in keeping up with the customers and the invoicing and what they bought, and it will invoice for you, and you could receive that payment online, particularly for international.
Okay. And then we have one more question about the loan, Linda. So since we're just learning about this now, can we make the loan paperwork retroactive?
Absolutely.
Okay. Perfect. Any more questions? Going once.
I have a question.
Okay.
So I want to know how much business do you need to do in other states, like outside of Texas, before you start looking into sales taxes in that state?
Well, each state is different, I'm afraid, and each state has its own little quirks. However, the Wayfair laws that were passed would indicate that anytime you sell something into another state and it's a taxable item in that state, you should collect taxes. So I would look at each state and kind of get a feel for what their rules are. If you sell a sales taxable item, you're supposed to register in that state and charge the tax when you sell it and pay the state taxes. Most states have some minimum level. I use $500 to $1,000 because I think after that, you got to get serious about it, right? But you have to register with the state. You're a quote unquote alien doing business in that state, and then you have to be responsible for the sales taxes. It didn't used to be that tough, but it's thanks to the Wayfair laws that each state wants their sales tax.
Yeah.
So,
all right.
A follow-up question on that. So if you are like an e-commerce business, you're selling online, is there like a way to have like a one and done application, or you have to individually file with each state?
There's no one and done application. I want to be sarcastic and say, are you kidding me? You think those states are going to share their money? You really have to look at each state and get a feel of, if you only sell one item in that state for all year, and it's depending, let's say it's under $1,000, I wouldn't worry about it. If you sell one item in that state all year and it's $10,000, I would make darn sure I'm registered in the state and pay the sales tax. So I think it's sort of one of those things. Most states are not looking for small sales. They want to catch the bigger sales, but they're going to get there, and they're going to start between software and things like that. They're going to start monitoring. So if you sell a lot of customers in a state, you're probably going to want to take a look at what the requirements are.
Okay, great. Well, Linda, thank you so much. We appreciate your time and sharing. This is being recorded. We will send out the replay. We will send out the slide deck if Linda is willing to share that with us.
I have a question.
Yes, ma'am.
Yes, I've made 2 entrants into the chat about a business coach.
Okay.
Is that a tax deductible? I guess my entrance was overlooked. Is that a tax? Do you recommend one, or how do you feel about that, Linda?
Well, I have had a business coach, and I will tell you that, remember I talked a little bit about that 3 to 5 year being so difficult, probably the reason I got through it. She was excellent. Her name is Christy Metcalf. She primarily is a sales coach, but that's not what I was looking for. And I kind of got myself into it without realizing it. But she switched gears to work with me to help me with a hurdle of, I have all this work and only this much time. Do I hire people? Do I stop those kinds of decisions, which is kind of sales oriented, but it was overwhelming and I was trying to do the work. And so long story short, she really helped me focus on what I was good at and to quit paying attention to things that I wasn't making any money at. And I think sometimes it helps somebody from the, I think I'm drowning and she's like, oh, you know what you need to do? So sometimes I think they're very effective if you find the right fit.
Okay, I really appreciate it. Your presentation has been awesome. Thank you.
Well, thank you.
All right, Tracy.
Oh, Linda, thank you so much. What I really like about that, I mean, you made it simple. I think you explained it in a way where people can really understand the numbers, which, I mean, we all know can be very difficult. So thank you for really breaking it down with good examples.
Thank you. Appreciate that.
You bet. We enjoyed having you.
Thanks.
So next week we do have, we have a 2-for-1, so it'll be about marketing. We do have Keisha Wiley from Brass Tacks Collective. She's coming in to talk about your brand beyond the logo. And then we also have Leah Frazier from Think 3 Media coming in, and she's going to talk to you about how to PR yourself. So 2 really great programs next week. And again, this we'll send out the replay. It'll also be posted up on our YouTube channel. And we hope you all have a wonderful evening.
Thank you. Linda, somebody asked if they could get the spreadsheet, Excel spreadsheet you use. If you get that to Donna Lisa, she can include it with what she sends out.
Okay, I sure will.
Great, thank you. And if anyone has just grant questions, it's a good time to ask.
Yeah. I'm going to go ahead and stop the live feed. There we go.
Okay, well, there are several things that I know, and we sent another email out this week on things you know to get to the second half of your grant funding. So you need a business plan. It needs to be a full business plan, not a business model canvas, because we want the full plan with